Breaking gold and silver news. And breaking news, India's national stock exchange is planning to set up a new domestic spot gold exchange that would bring more efficiency and transparency to bullion pricing. There's a trend emerging. So the National Stock Exchange will create the exchange together with the India Bullion and Jewelers Association, which represents industry members in the world's second largest consumer of the precious metal. And in from Zero Hedge, India is mulling rupee ruble payment system for trade with Russia. And the Reserve Bank of India added 2.6 tonnes to its gold reserves in February to week ending 25th. This took its total gold reserves to 758 tonnes. And this from Bloomberg, people from New York to Singapore are piling into gold as Russia's invasion of Ukraine drives investors to the safety of the metal. Gold is playing its age-old role as a safe haven in times of wars and crisis, and people all over the world are piling in. Russia's invasion of Ukraine has sent the price of everything from oil and gas to wheat and metals skyrocketing, sparking inflation fears and threatening global growth. That's driving retail investors everywhere from Vienna and Singapore to New York to the safety of gold, which spiked to $2,070 an ounce, close to the record reached during the pandemic. The almost 10% surge in gold prices since the start of the year is turning into a boon for bullion dealers like Rudolf Brenner, founder of Filoro Adel Matali, whose shops in German-speaking Europe now have long lines of buyers, a trend that's likely to continue with the conflict showing no signs of abating. When the crisis in Ukraine started, we saw massive orders, said Brenner, whose sales are triple their normal level. People are buying everything. Similar stories are emerging from gold dealerships around the world. At Empire Gold Buyers in New York, CEO Gene Furman says 30% of his customers trading luxury items like watches and jewelry want bullion instead of cash. Gregor Gregerson, founder of Silver Bullion in Singapore, saw gold and silver sales rise 235% in the first week following Russia's invasion, and demand has only intensified since. Investors are thinking along the lines of a worst-case scenario with the war in Ukraine and finding it prudent to buy physical safe haven assets in a safe jurisdiction like Singapore. The soaring demand comes after an already strong year for physical metal buying, particularly in Western nations. Demand for bars and coins hit 1,124 tonnes in 2021, according to the World Gold Council, the highest in almost a decade. That helped support prices at a time when institutional investors weren't dipping in as much. Well, I've been told from institutional investors that they are certainly dipping in now. The current clamour for physical gold is causing already high premiums on retail investors' favourite versions of the metal to extend gains, a sign of their scarcity. To get their hands on a 1 ounce bar, buyers may need to cough up as much as $100 over the spot price. Premiums are up about 25% at physical bullion brokerage Goldcore and are expected to rise further, according to its CEO, Stephen Flood. In his view, the main driver is concern about the financial sanctions on Russia, which have politicised and weaponised the payment system. It's the ultimate backup plan to have the metal within reach, Flood said. Everyone and their mum is looking at precious metals now. But it's not a one-way street. Many are bringing their bars, coins and jewellery back to the dealers to cash in on prices that haven't been this high since the summer of 2020. Back then, there was a spike in activity as lockdowns eased and people flocked to gold stores to trade in the haven. Still, there are more gold buyers than sellers now, according to Ash Kundra, who runs J. Blundell & Sons in London's historic Hatton Garden Jewellery Quarter. He attributes it to the far more fearful environment among retail investors. I'm buying about 60% of what I was in 2020, he said. Now I'm selling even more. Now, I have a couple of ways that I invest in silver, where physical silver and physical gold, where I get around paying these high premiums from the gold dealers, from the precious metals dealers. So if you guys want to know how I do that, maybe let me know in the comments below and I can do a video on that. And from my buddy Tarek, JP Morgan, the largest counterparty to the nickel trades of the Chinese tycoon, caught in an unprecedented short squeeze, So it seems the cancelling of trades on the LME was also done to prevent billions in losses for major global banks. Typical. And you can see January 2022 gold exports from Switzerland in tons. Look at China. Look at India. We have got something serious going on. And here we've got the combined holdings of China and Russia of gold, and, well, 5 times it's increased. So their holdings have increased 5 times since 2000. And well, we know in Russia's case how they have been dumping US treasuries over the last several years. Now, I've done a video, actually I've done a couple of videos about Luke Groman talking about this space and what's happening with the sanctions and why central banks like India, China, Russia, and others might be buying more gold. I did this video where Zoltan was talking about that these sanctions could backfire and that we could be seeing the end of the US dollar global monetary system. There's some big things that are happening right now, in my opinion. And here also in breaking news, the world's largest maker of gold and silver mining materials, sodium cyanide, has been compelled to drop manufacturing in Europe. And Charles Goodhart warns that with global debt at record levels and asset prices elevated, central bankers will struggle to tame inflation without forcing a deep recession. A golden era for central bankers is ending and life will become a lot harder. He says that inflation will stay high for decades. So for all those deflationists out there, how's your savings been since the GFC? All that cash you've been piling up. And yes, I've got a bit of cash as a small percentage of my portfolio, which I've talked about why I'm holding that. But if you have a look here, this is CPI, the purchasing power of the dollar. Now, since the GFC, there's only been a couple of brief periods of time where the dollar has increased its purchasing power. Otherwise, the rest of the time, it's been losing purchasing power. Even though the deflationists for the last decade and a bit have been preaching deflation this whole time. And you know what? I made a mistake. One of my mistakes, I listened to some of the deflationists back in 2011, and I was going to buy a property near the water, down by the bay here in Brisbane, where I live. And I was going to buy a property for $420,000. Well, I didn't, because listening to the deflationists were saying that properties were going to fall and that we're going to have a deflationary bust and whatnot. Well, guess what? I didn't purchase that property. I recently did a valuation on that property not too long ago, and that property is now worth over $1.1 million. So thanks very much, deflationists. Outside of that, I've done very well. And I've done well by investing in assets that do well in inflationary times. Now, I've done a video called Inflation Explained. What is the true definition of inflation? Well, let's just cut to a short little clip with Peter Schiff on Tucker Carlson's show.
We're happy to talk to Peter Schiff. He's chief economist at Euro Pacific Capital. He joins us now with his reaction to inflation. Peter Schiff, you hate to feel vindicated over something as horrible as inflation, which really is one of the worst things that can happen to a country. But you have been warning of this for, the years we've been talking to you.
Oh, sure, Tucker. And it did just happen overnight. Inflation has been a problem for a while. We just didn't care about it when it made stocks go up or real estate go up. But now that it's making food prices go up and energy prices go up and rents go up, it's a bigger problem. But, inflation is not created by COVID. It's not created by Putin. It's not created by greedy corporations gouging their customers. There's one source of inflation. The actual definition of inflation is an expansion of the money supply. And it's the Federal Reserve that's been expanding the money supply. They've called it quantitative easing, but they keep creating dollars. And it's the U.S. government that spends those dollars into circulation. And as it does that, the value of each dollar goes down. And so the price of everything that you buy with dollars goes up.
So if you're looking, I mean, you grew up in this country. You grew up in what was a middle-class country. Measurably, it was majority middle class. It no longer is. Hasn't been for quite some time, and it's becoming completely lopsided. That seems like, and that's a recipe for volatility. Okay, so that seems like one of the main effects of this Fed policy.
Well, the middle class is going to feel the inflation tax the hardest. You know, their wages are not going to go up nearly as much as the cost of living. There are other people who are retired who are on fixed incomes, and those incomes aren't going to go up at all, but the cost of living is. And, you know, when we got these inflation numbers yesterday, and they're saying 7.9%, which is the worst inflation since 1982, what they don't tell you is that we had a different CPI in 1982, and if we use the same CPI today that we used then, we would be over 15% inflation, which means 2021 or 2022, right now, this is the worst inflation in our lifetimes. We're experiencing higher inflation now than anything during the 1970s. And this decade is just getting started. Inflation's got only one way to go, and that's up.
I mean, look at the price of assets, from real estate to minerals. I mean, it reflects the falling value of the dollar, obviously. We appreciate you coming on. Peter Schiff, thank you so much.
And I'll leave you with this chart. So from 1792 to 1913, the dollar's purchasing power remained stable over that 120-year period. But then from 1913 onwards, something changed. What was it? Well, the Federal Reserve was created. And the dollar has been in decline ever since. And then in 1971, something else changed. And the dollar, along with other fiat currencies, are going down the toilet. History has a 100% track record when it comes to fiat currencies. The dollar, the US dollar, the Australian dollar, all fiat currencies are going down the toilet. And with that, that's why I own physical gold and silver. Once again, when you study monetary history, when fiat currencies collapse, gold and silver always comes to the forefront. Anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. If you haven't yet subscribed, please hit that notification bell so you get all my videos when I upload them. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.